Hello and welcome to Crypto Invest TV. I'm your host, X8, and let's get into it. So, this Monday has been a pretty bad one, you could say, when it comes to some people's opinions. I mean, it is not looking good when it comes to crypto, just for the simple fact that we are continually seeing this downwards trend. But at the same time, we can go ahead and we can pull out onto the 1 hour chart. What the heck? Hold on, everyone. Sorry about that. We'll just go to the 1 day chart. I don't know why it's all messed up like that. But if we just focus on after the major drop, right? So if we focus on where we're at right now, you can see that realistically, even though, yeah, we are on the lower end of the spectrum, I mean, we're still relatively flat from the major fall. I mean, if we go back to where the major fall was, I mean, you can see that, there was a lot more volatility from, March to April, from April to May, and then May to June. But from June all the way going into mid August, July now, we've actually been seeing it stay relatively flat, which is which is a fairly good thing. So even though we're currently sitting just above 30,000, I wouldn't say that this is necessarily like a freak out time, right? Um, but we'll go ahead and we'll just move straight on into today's topics. So we'll start with the first, which is Bitcoin slides towards 30,000, new crypto funding record. Bitcoin stalls as Binance faces more regulatory questions. Not a great week for Bitcoin as it's squeezing into a tight consolidation range in the low 30,000s. The cryptocurrency promoted as a hedge against inflation, but is still seen as a risky asset. Took a dip on Tuesday following a Labor Department report of an accelerating inflation. Overall, the risk of downside below $30,000 on Bitcoin is much higher now than what it was in the months of May and June, writes Pankaj Balani, CEO of crypto derivatives platform Delta Exchange. In a note shared with Forbes as of Friday morning, Bitcoin is changing hands at the low price of below 32,000. The breakdown, one direction or another, may come as Grayscale's Bitcoin Trust will release a swath of 16,240 Bitcoin on July 17th, which is what has already passed, one of the largest unlocks to date. Analysts have been debating on what the impact the unlocking could have on the Bitcoin price. So, I mean, the unlocking happened on the 17th. We're currently sitting on the 19th. So, I mean, realistically, I mean, the unlocking didn't see much fluctuation in price, I would say, just for the simple fact that if if we were going to see anything substantial happening, it would have happened, during the unlocking, and so we would have seen it happen. We would have seen much worse had people have actually wanted to, unlock in that manner. Um, let's see. What else do they say here? It says crypto is poised to set a new record for the biggest private round fundraise ever. The France-based fantasy soccer game and non-fungible token NFT trading platform Sorare is close to completing a $532 million funding round led by Japanese telecommunications company SoftBank, with participation from London-based venture capital firm Atomico at a $3.8 billion evaluation. This round would add an already lucrative 20. This round would add to an already lucrative 2021 for crypto startups, which has seen the top 6 funding rounds this year's collectively raising more than $1.9 billion. An NFT platform setting a new record in this climate would also counter the narrative that vertical is losing steam after the white hot winter. So, I mean, I still think that we're going to see some pretty good things going on with crypto. If we go over into our next topic, which would be corporation crypto, we can see that corporate moves into crypto could this could be fabulous for the fintech ETF. So Bitcoin is in a funk, and that's not up for debate. But recent weakness in the world's largest cryptocurrency doesn't diminish the long-term case for it. Nor are fintech companies running away from Bitcoin. That could prove fateful for the exchange traded funds like ARK's Fintech Innovation ETF, otherwise known as ARKF. For example, Square. ARKF's largest holding at a weight of 10.35% recently said it's building a new Bitcoin-linked unit. In a tweet from Jack Dorsey, the CEO of Twitter, said that they are building an open developer platform with the sole goal of making it easy to create non-custodial, permissionless, and decentralized financial services. That jibs with Dorsey's long-standing goal of transforming Square into a larger, broader enterprise. Currently, the fintech company's core businesses are Cash App, Square Seller products, and the music streaming service Tidal, according to Bloomberg. Cash App, which initially started as a money transfer avenue alternative to traditional banks, allows users to buy, sell, and hold Bitcoin and stocks. Square's success in the new Bitcoin venture could be important to ARKF's fortunes because the fund is the largest ETF owner of the stock. Two other ARK funds, the flagship ARK Innovations ETF, which is ARK-K, and then ARK Next Generation Internet ETF, which is ARK-W, are also upcoming the top 10 ETF holders of Square stock. So you can see how realistically, when it comes to what's going on with crypto right now, even though we're seeing the downwards trend, we're going to end up seeing a an overall bounce back, and then on top of that, we'll see a we'll see a a rise to potentially even higher heights. Sorry about that. I was mentally distracted. So I mean, in reality, I would say that I think crypto might look like it's weak right now, but in all actuality, it's more or less that we're just seeing the calm before the storm, right? So we'll move on to the next thing, which is ETF, or not ETF, which is ETH versus Bitcoin. Is there being a transfer? Is Bitcoin actually losing their dominance, or is there something else going on that we don't quite see right now? So digital asset funds have attracted capital over the past 2 weeks. I bet it's a slower pace as investors remain cautious after the crypto crash in May. It appears that investors are warming up Ether, which saw a third consecutive week of inflows totaling at 11.7 million, according to a report by CoinShares. Overall, net inflows to digital asset funds totaled at 2.9 million for the week ending in ending July 9th, down from the 4 million during the previous week. Fund flows have weakened following a period of strong investor demand during the Bitcoin rally of Q4 2020. So this is the weekly crypto asset flow. So you can see that, we had a lot more asset flow towards, I guess you would say, the end of last year, and then this is currently what we're seeing right now. What I would really like to see is I would like to see all the way back into the beginning of last year as well. Minor outflows were seen in Bitcoin investment products totaling at 7 million last week, which coincided with slowing trading volumes, according to CoinShares. In recent weeks, there has been there has been a regional divide in Bitcoin inflows, with North American providers seeing consistent inflows, while their European counterparts have continued to see outflows, suggesting a geographic divergence in sentiment is present, which essentially is meaning that, when it comes to where you're essentially seeing the move of the I guess you'd say like the continental moving of Bitcoin, more of the Bitcoin is starting to flow into the North American region versus into the European region. Europe is currently seeing an outflow while America is seeing an inflow. Multi-asset investment products were the most popular last week, and with inflows totaling at 1.2 million and now representing 16.5 of the total assets under management, according to CoinShares. Aside from Ether, investors have flocked to other altcoins such as Binance Coin and Cardano, which saw inflows of 400 and 600,000 respectively. Increased altcoin flows, although small compared to Bitcoin, imply investors are starting to diversify across digital asset holdings, which is always a good thing. Everyone should always try and diversify their assets. I think that, if you when it comes to, anything, you shouldn't always have all of your eggs in one basket. We know that can end up being one of the worst things that could happen. It's because if something ends up going wrong with that one stock or that one crypto or that one market, then you could definitely end up being in a world of hurt. Even though generally when it comes to markets, we see them generally trend with each other. But all in all, I would say that realistically, we're probably, just gonna have to sit and wait to see where things are really going to be going as a whole. Moving on into the next topic. I'm sorry. Accountants, lawmakers urge rules on crypto accounting. So it says accountants and lawmakers are urging standard setters to fill a void and write concrete rules telling companies how to account for Bitcoin and other cryptocurrency assets. The assets for which there is no binding U.S. accounting requirements, having drawn regulators' interest after sharp swings in the recent months, and investments by companies such as the electric car maker Tesla and payment provider Square. Bitcoin, which rose to a record of 63,000 in April, has roughly halved the value since then, mirroring volatility in other digital currency assets. The Securities and Exchange Commission, which oversee U.S. securities markets, is considering new regulations for cryptocurrency market to prevent fraud. Chairman Gary Gensler, who taught courses on digital currency at the Massachusetts Institute of Technology before he took office, has argued that investor protection Rules similar to those that cover derivatives and equities should apply to crypto exchanges. The Basel Committee of Banking Supervision, which sets global standards for banking regulation, last month suggested that banks dealing in crypto assets should hold a sustainable buffer to cover potential losses. In the accounting front, however, there hasn't been much progress. Financial Accounting Standards Board, which sets accounting standards for public and private companies and nonprofits in the United States, last year decided against adding the topic to its agenda, saying investing in cryptocurrencies isn't widespread among companies. Last month, the FASB launched an agenda consultation, its first in 5 years, seeking public views on its long-term priorities should be. Depending on the feedback, the board could consider new accounting projects such as financial reporting on digital assets. The FASB expects to review the responses, which is due on September 22nd. I think that's September of 2022 which are due September 22nd by early next year, a spokeswoman said. So I guess there's a buffer. I'm not sure exactly what they were meaning in that part. It's too early to tell what, if any, action the FASB would take on cryptocurrency investments, the spokeswoman had said. The issue of how companies account for crypto assets is separate from how they pay their taxes on investments because there is no specific binding account rules yet. Companies with crypto holdings classify them as indefinite-lived intangible assets, similar to trademarks and website domains, following non-binding guidelines from the Association of International Certified Professional Accountants. So under these guidelines, businesses have reviewed the value of these assets at least once a year. Companies have to write down a value if it drops below the purchase price, depending on the result of the impaired test. However, if the value goes up, companies can record a gain only when they sell the assets while not holding the assets. That's creating an imperfect picture for investors seeking to understand the company's crypto investments. You're getting really less than half the story, said Aaron Jacob, head of enterprise resource planning at software provider TaxBit Inc., which helps individuals and companies figure out the taxes they owe on their cryptocurrency holdings. Mr. Jacobs wrote to the FASB last month asking to set rules for crypto assets. A bipartisanship group of 7 congressmen led by Tom Emmer was made a similar request to the FASB in May, pointing to the surge of the value of digital assets. Lack of thoughtful and carefully developed authoritative guidance from the FASB threatens the ability to create accurate and consistent financial reporting on a large and fast-growing financial asset class, they wrote. Mr. Emmer last week introduced a bill seeking for Congress to provide a clear definition of digital assets under U.S. securities law. Big Four accounting firms, which is the PricewaterhouseCoopers said it encourages standard setters to look into accounting for cryptocurrencies. The KPMG declined a comment, while Deloitte and Ernst and Young didn't immediately respond to requests for comment. So far, most finance. Oh my lord, I'm sorry, everyone. So far, most chief financial officers have steered clear of crypto investments due to concern of the volatility. The absence of tailored accounting rules only exacerbates these worries, said uh, Dinzy uh, Appelbaum. I'm sorry, I'm sure I botched their name. Assistant professor of accounting and finance at Montclair State University. If there was a standard set, CFOs would know how to proceed and whether an investment in a coin is appropriate for their firm, she said. For companies to for companies that do dabble in cryptocurrencies, shareholders want to see details such as underlying purpose of the crypto investment, the purchase price, and the quantity, said Ben Welcher, a research analyst at Zion Research Group, which provides investors with information about accounting and tax issues. One prominent corporate investor in the cryptocurrencies is Tesla, which disclosed its annual report in February that it had bought $1.5 billion in Bitcoin. As of March of uh, as of March 31st, its Bitcoin holdings totaled at 2.48 billion, according to a quarterly filing. Square recorded cryptocurrency holdings of 472 million as of March 31st, up from the 136.5 million at the end of December. MicroStrategy has I don't even need to even read their article. We already know that MicroStrategy has, been buying up Bitcoin as well as I think some other cryptocurrencies like crazy. One alternative to treating crypto holdings as an intangible asset could be to allow companies to apply fair value accounting rules for certain digital assets if the fair value can be determined readily. Says the FASB, Bitcoin would meet the criteria according to Zion Research's Mr. Welch. So if you want to read the rest of that article, you can go ahead. But I mean, I pretty well, read it over for the most part. Essentially, I think in a way it's kind of good what they're talking about, and then in a way it's not, because it just kind of depends on which way it ends up flipping or flopping, right? We could end up seeing it go, one way or another way, just based on the simple fact that if we get somebody that has ill intentions with crypto, we could end up seeing it really hinder people wanting to continue to invest into cryptocurrency. So, I mean, it primarily is going to end up depending on, like I said, whether or not we end up seeing a good, I guess, regulation or, accounting practice come out for cryptocurrency. But if something comes out that would essentially hinder it or reflect negatively towards it, then it could end up being a fairly bad thing for crypto. If it's still sitting, if the market's still sitting at where we're at right now, it would really also depend on how strong the market was at the time. If we were in the middle of a bear market when that was happening, I'm not sure exactly how bad it could end up getting. We could probably end up seeing it get fairly bad though. We'll go ahead and move into the last main topic of the day, which is Axie Infinity. Almost halves its value following the 971% bull run. The governance token earlier rallied exponentially despite dull price actions for the broader cryptocurrency market. A supersonic rally in the Axie Infinity market saw its native token Axie Infinity Shard surge 972% in just 23 days, now risking exhaustion. The AXS USD exchange rate has plunged to as low as $16.02 back in July, 4 days after topping out at $29.86. In doing so, the pair attempted to neutralize its extremely overbought sentiment, as flashed by its daily relative strength index, which is the RSI, that indicated uh, that that treaded above 84. Oh my lord. The relative strength index, or RSI, that treaded above 84 last week, showcasing profit-taking sentiment among investors. The AX the AXS to USD showed signs of rebound at 1638, a level that coincides with the 61.8% Fibonacci level that in turn constitutes a Fibonacci retracement graph made from the 23.89 swing high to the $4.07 swing low. The two levels represent the top and the bottom of the AXS slash USD current curve range. Additional support came from the pair's 20-day exponential moving average. The wave, now near 1538, was instrumental in strengthening Axie Infinity. Upside bias at the beginning of this year capped a wild downside retracement and sending prices in the direction of their previous uptrend. Comparing the AXS current to and April-May Fibonacci setup source from TradingView, you can see right here exactly what kind of gap they're talking about, right? Therefore, the previous fractal hint at extended downside correction for AXS in the sessions ahead. As a result, the current 38.2 Fibonacci level 11.68 serves as the interim profit target for bears. Nonetheless, breaking below 38.2 fib level could expose AXS to the support confluence of 23.6 Fibonacci level and the 50-day simple moving average. Despite its latest bearish move, AXS was up more than 2,500% on year-to-date time frame. In detail, the cryptocurrency serves as a governance token for Axie Infinity, a non-fungible token NFT-based online video game developed by the Vietnamese studio Sky Mavis. Players compete and win rewards in the form of in-house token called Small Love Potion (SLP), and then in turn they can use SLN to breed digital pets called Axies inside the game. By doing so, dedicated players can make between 100 to 200 SLP tokens a day on average. Roughly, that equates out to $77 to $155 per day, per current exchange rate of 77 cents per token. The play to earn feature has been received well by cryptophiles. Just last week, Axie Infinity ranked in over 84 million in its fees. in the previous 30 days, more than Bitcoin and Ethereum made in protocol revenue, and more than all the top decentralized financial finance apps, and including PancakeSwap, MetaMask, MakerDAO, Synthex, and others. So if you're into gaming and you got a lot of spare time and you want to kind of make some money on the side, maybe Axie Infinity is something that you might want to look into. So we'll go ahead and we'll just pop back on over here into Bitcoin. We'll see what we're doing on the minute chart. I don't know why I have to do this exactly, but this is where we're at currently on the minute chart. So, I mean, realistically, I don't think we're looking too bad for the day. This is what we're looking at over the past, I guess like 12 to 16 hours. If we bring it down, we can see that, over the past, over the past, I guess you'd say 24 hours almost, right? Let's see. We really didn't see that big dip up until about 12:30 today, and then we dropped from, that from 31 all the way down to, into the 30,000s, and that's kind of where we've been hovering. But, we have been seeing a little bit of an upwards trend. If you look right here, I can go ahead and pull out a line. You can see that, we are, starting to see a bit, of an upwards trend there. It's not perfect, but, I just quickly set that up. But, if it would just let me grab it, there we go. You can see that, we're still, it's not like it's anything special, but, we are on a bit of an upwards trend. It really would just depend on where we're at, come over here. As for, what we've been seeing for, the whole, I guess, what we've been seeing for the whole week, though, I would say has been kind of more of a downtrend. But at the same time, like I was saying earlier about that uptrend, realistically, I don't think that, we're looking too bad. I could even draw us a line over here on the top end. So, we could end up seeing an intersection point, right here, or, if we were to come farther down, it would probably be right here. So either we would see it. So either maybe, in the past, in the next, few days, we'll see it try and bounce back over here to above 32,000. If it continues to remain below 32,000 or even below 31,000, then we might see it consolidate closer to over here at the end of the month, which would probably be more likely in the $30,000 to $29,000 range. So it's just something that you want to keep your eye on. Other than that, we don't have much left for the show today, but we have plenty coming for you come Wednesday, so be prepared for that. Other than that, have a great evening, and Crypto Invest is out.